Hey everybody, this is DayTraderRockstar, and this is a very special video, and this video is going out to all the new traders out there, maybe new traders, maybe experienced traders. You might know me from doing the show Day Trading, the Day Trading radio show, which is on each and every day that the market is open, since we're going on 9 years now. And I've been trading myself since '96 full time, and started getting into the market in '92. And it's 2016, and we do this show every day, and it's a passion of mine. And even after so many years, going on 20 years of trading as my main source of income, now at that point I am starting to actually get to a point where I have washed away all the crap that comes along with the market. There's so much out there. There is so much that is thrown at you. You could watch your Mad Money, you could watch your Fast Money, you could watch all these shows and all these experts. They line up, and they'll line them up and they'll parade them right in front of you. And one person will tell you that the market's going to crash. The next person tells you it's going to 20,000. And just because you're wearing a tie doesn't mean you could call the markets right. And when they're wrong, they disappear and they come back a year later when they think that the market's going to, and that happens over, and no one's accountable. And so I understand why a lot of people get frustrated with the markets and stuff, but there is a scientific approach to the markets. And when I trade live each day, we work together as a team at Day Trading Radio. We have hundreds of traders in the room, and I teach this methodology that has been developed over years. And now we're at a point where you could feel the excitement. People are starting to realize we're onto something real special here. So I've been developing this indicator. It's called the Ram in the Bush indicator, and it really automates a lot of the indicators that we look for, or one of the prime setups, which I call the lane divergence. Now, I'm not teaching anything that can't be researched and stuff, but I have a unique way of teaching it, and I tested it and I trade with it, so it's easy enough to see the results. And now, and again on this video, I'm excited. Going forward, it seems like after 20 years of trading, you would expect to be set in your ways, but to be able to see, it's really not being set in your ways. It's about clearing out all the junk, and understanding there's a simple way of doing things. There's a right way and a wrong way, and I use a lot of analogies in my trading. I try to compare trading to gambling, and a lot of people look down on that, saying trading's not gambling. You could figure it out. And yeah, of course you can figure it out, but there's also the unknown risk of news and things that happen, and earnings and downgrades, and there's outside influences that you cannot control, and it is hard sometimes to get that. But the important part is, if you're going to make money in the market, there is a good way of doing that, and it requires extreme discipline. And the discipline comes because the setups are great. The setups are great. The discipline is to keep you out of the market until those setups show up. And when those setups show up, they're high probability setups, and now we're alerted to them whenever they happen. So now it's the next phase of the process of becoming a successful trader is to develop that discipline. The discipline to accept the signal, take the signal, and even more discipline to take it off the table with a profit. Many people let their trade go thinking they're going to just continue, and it comes back, and the market has a way of taking out the highs and taking out the lows, and that's the nature of the electronic snake. It'll go and it'll bite everyone. But this setup that we've pretty much perfected. And I say that cautiously because nothing's perfect. But when we talk about, again, something that you cannot be perfect, say, a game of blackjack, and you sat down at a table of blackjack, and let me see if I can actually bring up I had some actually cool pictures and stuff, and let me see if I can find that right here. All right, wasn't much on my little picture, but, blackjack. I like to play blackjack. And if you sat down at a table in Vegas or something, and you sat down with some people who takes blackjack serious, there's a lot of books written on it and stuff. There's a certain combination of hands. There's people who count cards. There's everything here. But there's also statistics and probabilities in blackjack and a lot of games like that. And these people who read those books and make these rules know that stuff inside and out. And if you're following that and you sit down at a table and a dealer hands you a certain setup or a certain pair of cards, and the dealer has a certain pair of cards, there's usually a certain advantage of doing something. You know, they give you a little card sometimes. It'll tell you the odds. And that's the important part of it. If you're going to be doing something, you might as well do it in the best possible way, give yourself the best advantage. So gambling is like that. You want to play the things that give you the best advantage. That's why people play, the baccarat or some other, excuse me, some other those foreign games which give you better odds, and the same thing with poker. There's an analogy with poker. Some people could sit out and just kind of hold back until they get a good hand, and they bet that hand. And these are the people that are going to stick around. Gambling and trading, and especially day trading, has one thing in common. They crush people. They'll make you broke faster than anything. But another great analogy is my baseball analogy, and I want to show you another thing. It's just like you get up there, you practice, and again, being a world-class athlete, if you are, or someone who's doing a sport, you have to be good, and you have to practice, and you have to have that discipline to continue to do what's right. And when you're in the groove and you're doing something right, the mechanics are right. You see the ball clearly, and you're waiting for your pitch. And waiting for your pitch is exactly the same thing. The discipline you need is to wait for your trade, because those trades will come to you, and they'll be identified to you, and you'll understand why they're setting up. But unless you have that discipline to hold back and wait for that, you're going to be sitting there in a candy shop, just dying to take a bite of something. And that's fine. I get it. I understand that. I understand, I'm the same way. It's hard not to get involved. But now, when you see it so clearly, it's a rush to wait for it. It's like, all right, that's fine. I could wait for the next setup. So, we're on top of it now. And, going forward, you're going to start seeing these alerts come out. And if let's see if we can actually show you some of these today. Now, I've been working on this the last 2 weeks, really intensely, trying to get the alerts to come into the room, the chat room of Day Trading Radio, the members chat room. Now that these alerts are being streamed into the room, the Trade Alert box, and I also want to get them out on a private members Twitter feed, because I think if people get it, at least they won't miss it. Now, like I said, I teach how to recognize these, but not everyone's in front of their computer at the time. You might get up, you might get the alert and stuff. I love giving these alerts. These things, I enjoy watching the traders take these things and see the points just rack up and the money rack up in the room. It is a wonderful experience, and everyone works as a team. They're pointing these things out, and now we have this bot, the RAM bot. It's going to be a great feature, Day Trading Radio. I'm super excited about it. You tell I'm pumped. I don't even want to go. I've been at the office probably here three nights this week until about 11 o'clock working on things. Anyway, so I have a few of the alerts set up. And again, this is even for newer traders out there. This is important. The first part of this video is just talking about the discipline required. Unless you have that discipline, it doesn't matter how good you are. You're going to get into the crap. You're going to get, you're going to fall into the same traps that new traders get into, buying penny stocks and buying rumors and chasing things and stuff. You have to be extremely disciplined, because if you could do it, and that's not even the right thing. If anybody could do it, then everyone would be doing it, and it wouldn't work. The market doesn't just give you the money. You have to work at it. And we've worked at it, and now we've started to see that we have we have the edge, and we combine certain things, and we just work towards us. Let's get to the alerts here. All right. So here's my alerts now. The ram in the bush. I have it for the Russell. I have it for the 5-minute buy signal and a 1-minute buy signal. I haven't set up the short signals or sell signals yet. Short signals. They're not going to tell you when to sell, but we also discuss that in the room all the time. I have that. Lots of videos out on that. But today, we're going to see the 1-minute time frame set up a lot, and you might say, "Well, I don't trade the futures. But you can trade the SPY. You could trade things off the futures, and if that's too complicated, just know that the market tends to, stocks tend to move around with the market. So if the S&P is moving up or the overall markets are moving up, there's a good possibility that the stocks are moving up too. And if the market's moving down, the same thing. It's a good possibility that your stock is moving down too. So if you could see a setup in the markets, and we call all out, then you'll be able to base your trade knowing that you have a little edge on that. Now these are scalps, but every time frame represents a different length of the trade. A 1 minute could be basically a minute trade. It could be a minute trade. It could be the beginning of a bigger trade as we go through those time frames. But the 1 minute here. Let's go to the 1 minute. Now, this is basically where we would let's move this out of the way. I want to move this over here for a second. This is the chart for today. It was basically a pretty bullish day. And each one of these circles, if you could see it, represents where we had a trigger today. And you could see there is a relationship between the stochastic rotation and the alert here. The stochastic rotation and the alert. Here's one back here. There's one here. In case you can't see it, there's one here also. So these were the 4 alerts that were generated today in this. And as you can see, if you look back and you do your, you just do your back test here, you will see that each one of these were probably one of the better spots to go if you were going to take a long in the market, other than holding all day long, which you could have done also. But a lot of people just don't have that, mindset. And you are taking the scalps here and taking advantage of the pullbacks. You will get this alert. You will get this alert. You will get this alert, and you will get this alert. And you from that point on, it's game on. Plus, I'm guiding you through the trade live because I'm getting this live myself. So now you take a look at the alert chart. This is the alert chart where, if I look at the let's go back here for a second. Let's go back to alerts. Let's go to alert log. These were the alerts that triggered today. There was actually 4 of them. 1, 2, 3, 4. All of them were 1 minutes. So there was no 5 minute. And 5 minutes great because it gives a better setup. And the Russell, I'm going to have the alerts for the Russell. I'm going to have the alerts for the NASDAQ. Some of the ETFs, I can have the alerts for the oil, crude, gold. I can have these alerts set up for anything. Just right now, we're just touching, tip of the iceberg here on the S&P, and that's working out great. All right, so then I'm going to just say, all right, I want to see these alerts on the chart. So I'll click on that, and it'll bring up a chart. And this is using the TC2000 platform. And I'll just adjust this a little so you can see this a little bit better. We'll do a candlestick chart. All right, and then you're not seeing much down here, right? You're not seeing much down. This is the formula. This is where you're going to see the alerts be generated. So here's the alerts, and you can see these circles have been superimposed over the chart. I didn't even put this one down, which was yesterday's. And you can see they continue. These were just nailing every pullback. And you've got to remember, the market here is moving, 5 to 10 points in the matter, using the 1 minute time frame, which is good on these rotations. Normally, back in last year when the market was seeming to be dead, we would be sometimes just chopping around for an hour, not even getting a point. Now you're seeing 5, 10, sometimes 20 points in a matter of minutes. So this is really a good environment for this type of action. And you can see the alerts today. These are the generated alerts. One here. See, I don't know if we can actually put take a look at the I don't know if I have a measurement tool. Well, I can't find my ruler, but what I wanted to show you is these are 1 minute rotations. We have an exit scenario also adapted for this type of move. So it actually tells you where you should get in, but also where you should get out, and that's based off the rotations. And some of these will give you multiple points, like 1915, this one all the way up here. It might have topped out at 1920 here. A couple might just give you a couple points. Really, but the bias is always going to be in your favor usually, unless there's news out there that kind of is moving the market around. And that's just, again, comes with discipline, comes with a little experience, not to get in front of anything that can hurt you. Just establish yourself, wait for those setups, you get them alerted to you, and then from that point on, develop your trading strategy. Depending on what your risk reward is. We also talk about that and build that out. And that'll be part of this next segment. As we continue to build on this system, I will put a section on the site that really, encompasses the rules, the entry rules, the time frames, and how to, figure out that risk reward. Right now, if you trade in the futures on this, You know, I recommend just multiple contracts. You start off with 2. On the setup, you know, we go into a little bit more detail on the different time frames. Once you get a 1-minute setup like this, then we want to kind of compare that to the 5-minute time frame. That way we see if we're starting to see a bigger, and that kind of gives us a little more idea of how we want to adjust our profit potential or profit range. And that means a lot, because we want to pretty much take it off pretty fast on the 1 minute, unless the 5 minutes on our side, and let the other one, you know, the second contract, the multiple contracts after that, let them be, but move that stop up to break even, because the divergences will give you the bigger moves in the market. And this is just a 1-minute chart. We're going to have alerts for the 5-minute chart, and that's even bigger. You're going to get bigger moves out of that. Now, let me see if I have any that were triggered over the last couple days. All right, only one came up. Actually, 2 came up. This was the FOMC rate decision. So, as we say, there was a big chop here because of the news. You know, you don't trade any indicators into news, because you're going to get a wicked spike or a drop, and it's going to trigger something. So you don't take any of that. That's not. I wouldn't even consider that a true alert. This one back here at 3:30 looks pretty good. And from that point on, that was actually going into the last part of the day. So it was kind of hard to also look at that as an effective trade going into the last part of the day. But those 5 minutes, when they do show up, they become very, you know, the 1 minutes are going to happen faster and faster. But when you have a nice 5-minute setup, that enables you to really, you know, take that trade for a little bit longer distance. And then the next thing is going to be that 60-minute time frame, and even a daily time frame, which I usually put out on the HPS setups. So whenever we have a daily ram in a bot setup, it's just, you know, that's a major signal in the market. And when I started off, I was talking about a lot of noise in the market, a lot of people out there just calling things. And when you get to look at that kind of a scientific or mathematical approach to the market and understand how to have a logical approach, that's the way I like to approach the market. Try to cut out a lot of that noise. I get back down to some of these important rules, and I put them out in a kind of a flow chart like this. And the stochastics are a main thing for me, because that is the measurement and the formula on this is really a great thing that was developed in the 1960s. And you know, I've done so much work on it. This always, you know, I would like to always have this setting up first, and then I refer back to some of the other things that we pay attention to, the trend lines, moving averages, especially if there's a recognizable pattern. And we've noticed there's a few good patterns to pay attention to, the 1, 2, 3 pattern, flags and pennants, which we have wedges and channels. And if you're a newer trader, stick to these. You don't get too concerned with any type of exotic patterns. Head and shoulders even are not what they are. Head and shoulders is a channel breakdown, basically. You know, so when you look at a head and shoulders, you look at anything. You know, every good system will say, all right, the market's going down. The system, it should say that. Like if the market's going down and you said, oh, my system was overbought and we've turned over my system, you know, my method worked. Well, yeah, most methods are going to work, or else it wouldn't be there. But there's, you know, when all those systems are going to be wrong, then they're all going to be wrong too. This, I think, brings it to the next level. This is something a little bit outside the norm. We're looking at divergences. We're looking at the combination of important things, and we're also using discipline as a major factor in the trade, because like I said in the beginning, you're going to get, you know, you're going to have a great setup, and you're going to probably have a high percentage chance of the move up. The timing and how fast you rotate back up before, you know, moving back down is the key. And if you're able to understand your time frame, your objective in the trade, it might just be 3 ticks or, you know, 2 points. That's on the futures, but you also want to know, you know, how to trade how to trade the options against this, how to trade some of the stocks against this, and they're all going to use the same rules. So that's it. Exciting stuff. I'm going to work more on these alerts to get them out to you. They're going to be exclusive to Day Trading Radio members. You know, this is something special we're working on. So I'm going to, you know, I'm actually working on kind of a new way of alerting them on Twitter with a special members feed on Twitter, and that way you're not going to miss it. And I can even send this out in text if you happen to, if you're a member out there and you're getting this and you want it set up and have these alerts sent to you by text, let me know. I'll set them up for you. Great stuff here. You know, just exciting. All right, so you can always watch us every day. Like I said, you'll see a lot of what we talk about in this video discussed daily. And that's it. I'm going to wrap it up right now. Have a great weekend, and I'll see you in the markets.